Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of the Trader's Edge. Thanks so much for joining me, folks. I absolutely love being here with you. What a great start to the day. It is Terrific Tuesday. Hopefully you're off to a terrific start of your day. If you're not, you can change it. You can change it how quickly, folks? That's right. In a heartbeat, in the snap of the fingers. That's just like the winds that are blowing these markets. And right now, they're blowing them due south. That direction is headed due south. Right now, you do have the futures. You've got the ES Mini up about a point. But that is well off of the high that came in this morning. Oh, I think it was around 4:30 or so. In the morning, you've got the Dow futures up maybe about 6. That's well off of their highs. I believe they were up about 70 points or so earlier. Maybe when I say earlier, I'm talking like how about 8-ish or so, 8:15. NASDAQ futures up about 8. Russell futures up a point. And it is all about King Dollar. You know, Go Long America. So this is our Go Long America Day version. You got the King. It cannot keep a King down. King Dollar up 30 ticks right now, trading out at 81.05. You got gold down another $4 right now, out at 15.56. It's on its way to 15.23. Absolutely on its way to 15.23. You got silver off 21 cents, out at 28.13 right now. Light sweet crude off 25 cents. Our call numbers 877-927-6648. You know, absolutely fantastic shows yesterday. Great callers. Really do appreciate it. Was fortunate enough to be able to do Tom's shows yesterday from 4 to 6, and that was a blast. And so, you know, and I also got some really great emails. You know, I had a great caller yesterday that was Glenn, who was talking about, I like to use metaphors to be able to take a look at life. I'm going to go ahead and give you another one this morning because it's just simply questions that are asked. You know, metaphors or, you know, ways to be able to link the known to the unknown. It's absolutely the most rapid way to learn. It's the way that you should be able to teach others or even want to be able to learn yourself. You know, it is really all about self-development. And so Glenn shared a great story, a true story, which are always the best, you know, because then, and what actually, you know, when you are able to create those positive anchors, you know, when you take a look at, you know, and the story that I was really talking about yesterday is the fact that, you know, we all start at the same place. We all end up at different destinations. And a lot of times people will say it's just simply the circumstances in life. You know, I take a look at these markets. I take a look at, you know, we all start in the same place. We absolutely all start in the same place. We all end in a different, we have a different destination. Yet the circumstances are always the same presented to each of us, to you, to me. And to me, circumstances are nothing more than the wind blowing, than the market's changing direction. And that's why you want to understand A to B equals C to D. It's why you want to understand Fibonacci numbers, because those are the ways that you're able to plant your sail. See, it's always about being able to plant your sail. Well, after that, you know, after Glenn shared that story with me, got several emails yesterday, not just about that, even those about being able to just simply visualize, you know, your dreams, which is really what it's all about. You know, it is so important to be able to visualize your dreams. And I don't know if you've heard me talk about the Roger Bannister story. I haven't done that for a while. I'm not going to do that right now. But the Roger Bannister story, the quick story on that, folks, is, you know, he's the first one to break the 4-minute mile. That's after thousands of years. Guess I am telling it. I'm not going to tell the full story. That's after thousands of years of people trying to do it with every possible attachment, you know, hooking themselves up to a horse or something and running, and you know, and how he did it. If you go back, you take a look at his story. He did it through visualization. He visualized doing it first. So whether you're riding a bike and you're just trying to get rid of the training wheels, and you're trying to teach your children or your grandchildren, you want to make sure that they visualize it first. And there is no better time to be able to create an anchor and great foundations than when a child is between ages 0 and 8. Between ages 0 and 8, folks, is when they learn absolutely everything. So if you've got young kids or you've got grandchildren in your life, you know, why don't you help teach them how to visualize? And there are so many different ways that you can be able to teach them, have them visualize something first. You know, oftentimes I'm asked that question, you know, how can I best help my children? How can I best help others? And, you know, folks, my experience is the best way, you may find it a surprise what it is I'm going to tell you. The best way that you can actually help others is by first helping yourself. You see, it's really all about being a great example, because people around you are always observing. and you can lift the tide. It's not about you specifically helping them. The way that you help them is you help yourself. So let me give you maybe the metaphor, or maybe the way to link the known to the unknown so that you can see what I mean. How many of you out there have been on an airplane? It's got to be just about 99% of the audience, right? Think back to the last time that you were on an airplane. And when you had that steward, stewardess, flight attendant, whatever, how they want to be, referred to as, but when you had that flight attendant get on the speakerphone and start giving you instructions, and in fact, even when you look up, what do you see? You see that oxygen mask, right? Hopefully none of you have ever had to experience the oxygen mask, because that's a trip into itself. We won't go there just yet. But what I do want you, so now can you picture what it is I'm going to say? Because I'm saying that the best way for you to help somebody else is to help yourself. Well, when that flight attendant gets on and they tell you that should the oxygen mask drop, what do they have you do first? Even if you have small children with you, they tell you, put that oxygen mask on yourself first. Help yourself first, because that will then allow you to help others. So to me, that is the metaphor out there. That's what it's all about, and it comes to self-development. So if you're trying to be able to teach your children maybe some good principles, maybe it's money management principles, maybe it's how to invest in the market, the best thing that you can do is develop your own skills, whether it's listening here to our shows, whether it's attending workshops, whether it's reading books. What you want to do is always continue to spend time developing yourself. I do it, and I suggest that you do it. That is the absolute best way to help others, folks. So let me continue to help you. Let's go take a look at these markets. Let's figure out what these markets are going to do today, and it is really all about King Dollar. But before we do that, before we get into that, one of the things that I did as I was going on to the air last night doing Tom's show, in my newsletter, I give a market posture each and every day. That way, because, what I do like to do is to provide clarity. It's either black or white, or if there's no pattern out there, I don't mind saying that there's no pattern. It's neutral. But I like to be able to give clarity. Now, my market posture is based on the S&P 500. But where I spent time yesterday, and you've heard me talk about this, the S&P 500 is 500 stocks. And it's weighted. You take a look at the weighting that's inside the S&P 500. You got the technology sector first. That represents 23% of the overall weighting of the S&P 500. You got the XLF, which is 15% of the S&P 500. You've got the healthcare, and XLF is financials, folks. You got the healthcare sector. That's 11%. You've got the consumer discretionary. That's 11%. So you've got a weighted area there. So it's not really giving you necessarily the true breadth of the markets. Certainly, you can't say that the Dow is going to give you a great breadth of the markets. You've got 30 stocks. You've got Caterpillar, IBM, United Technologies, Disney, General Electric. Great companies for sure. Cisco, great companies. But it's not going to give you the breadth of the market. Where I spent time yesterday, and I've been leaning towards it the more that we've been trying to get some clues with regard to the market, other than looking at the futures contracts, which have got absolutely beautiful patterns out there, by the way. But when we take a look at the health of the market, I realize that 70% of the people that are listening, true statistic, 70% of the people that are listening in to this show have got money invested in 401ks, retirement funds, and they're making just simply trading decisions. You're in or you're out, and maybe it's one of a handful of funds. Maybe it's a bond fund. Maybe it's the S&P 500. Maybe it's the you got a slew of funds, and it's either in or out. And if this is a one world market, get markets that are moving in harmony on the way up, on the way down. And right now, the harmony is on the way down, folks. And so what I did yesterday, because of knowing that, the way that I take a look at my responsibility is always to provide care, guidance, and protection to each of you that are out there. So that is first and foremost. It's not about me being able to give you my viewpoint. Of course, I always like to give you my viewpoints on life, because I do believe I'm able to help teach you something or make you at least think about things a little bit differently. When was the last time you thought about the oxygen mask falling down and helping yourself out first? To me, that was the best thing that I could come up with as a way to be able to link the known to the unknown, and why it is that you should help yourself first. Well, how it is that I also want to help you is I want to when we take a look at the New York Stock Exchange, as we were coming into the show, as I was coming into doing Tom's shows, and knowing that 70% of the folks out there are just simply making decisions, I have a philosophy, and that philosophy is always to take a look at different technical tools that are available to us. Doesn't matter whether it's a B, C, D, whether it's a moving average, whether it's a astro cycle, whatever it is, to take a look at those tools, go plot those on the charts, and then see what difference they make. And one of the things that I shared with all of the folks that attended my live Master Trader Series, folks, was I showed them how managing their long-term money, if they just simply used just these simple moving averages, and the simple moving average I'm taking a look at is the 50-day and the 200-day exponential moving average. But when you put it on a monthly chart, and that's what I've got up on my screen here right now, you've got to convert it because you no longer, it's not, there's more than 50, there's not 50 days in a month. So you have to convert it. And I'll give you what that formula is, when we do come back from the break. But what I want you to know right now is that the New York Stock Exchange, the 50-day is 3 points away from crossing through the 200-day. That, folks, is the absolute cautionary flag out there. That is like riding the streets and yelling out, be careful. Absolutely be careful, folks. We're going to take a look at what this means going back to the New York Stock Exchange. I think I've got data going back to the 70s or so, and it's something that you absolutely should consider, and maybe you want to plot on your chart. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of tfnn.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at tfnn.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, 877-927-6648. So the New York Stock Exchange, that's really where it's all about now. The ticker symbol on my screen is NYA. That might be the ticker symbol for you as well. And we're taking a look at the 50-day and 200-day exponential moving average. So from a daily standpoint, it says 50-day, and we're looking at a monthly chart. If it was a weekly chart we were looking at, there's 5 trading sessions in the week, so a 50-day divided by 5, 50 days divided by 5, we'd be taking a look at a 10-week on as far as how you would set it up on your system, as well as 200. Okay, we're looking at a 50 and 200 day. The 200 divided by 5, you'd be looking at 40. Well, on a monthly chart, if you figure it out, there's on average 21.6 day trading days in a month. So you just simply are taking the 50-day moving average, taking 50, dividing it by 21.6. It's going to give you a number of 2.3076, something like that. You can actually do the math. You can take 200 days, divide that by 21.66666, and you'll get 9.230. That's what you're looking at when you're looking at my screen. Now, the important thing is to understand the crossover. So let's go from where we're at and start taking a look backward. Okay? You had the 50-day cross back through the 200 is sometime in January, late December, as you're taking a look at the chart. So if you just were simply managing long-term funds, you would have gotten into it. And you would have gotten into it, somewhere around the 7,500 area. You're right now at 7,700, and right now it's giving you 7,600. Right now it's giving you the signal that maybe you should consider moving out. Now, we'll probably get the full signal today based on the way that the market is trading, but we won't know till 4 o'clock. If we come back and take a look at the last crossover when the 50-day crossed through the 200-day, again, looking at this on a monthly chart, that would have told you to get out of the market sometime in the middle of July 2011. You would have gotten out somewhere around the 8,100, 8,150, 8,200 area, and you would have stayed out of the market. You would have missed all this downside move. You would have gotten back in, as I said, sometime in January. If you come back a little bit further, you can see the market, you would have gotten into the market back here in August 2010. So you'd have gotten in August 2010 when you had the 50-day cross up over the 200-day, and you would have stayed. So you got in here, folks, right in the $6,700 range, and you would have ridden that all the way up until you got the signal to get out back in the 8,000 range. Take a look at here in the 2007, coming off of the 2007 highs here. You would have been out of the market in December 2007. You would not have gotten back in. And again, this is a lagging indicator, but it's a great way for those of you at home that don't really even follow any patterns. Maybe some of what it is that I say is Greek. Of course, my Greek is better than the Greek over in Greece because they're certainly not folks of their word, at least on the political side. I absolutely am. And so in this case here, you would have had the crossover. You would have missed the entire downside move. There are people that have a strategy that say you should stay in the market at all times for long-term funds. I can tell you, looking at a chart, hogwash, actual BS. All that is before Steve, folks. because when you take a look at it before, Steve, maybe that's what you thought. But here, when you just simply see the 50-day crossing through, take a look at this. You'd come back into the 2003 time frame. You'd have gotten in April 2003. You would have stayed in the market. You would have stayed in the market all the way up almost to the highs, going back into December 2007 from your long-term funds. You would have also missed out on this downdraft that we had in 2002. You would have gotten out of the market here almost near the highs in March of 2002. You would have, in March of 2002, folks, you're taking a look at 63.48 when it got down to a low of 49.70. You would have gotten back in somewhere around $5,100. So as I pull this back, as you take a look at this chart here, folks, as you take a look at this, you don't miss on the large moves when you utilize this, large moves up and large moves down. You absolutely are taking full advantage of it. You might have a little bit of jostling around as the market is uncertain as to which way it's going. You have options to get in and out of a market. You're making calls that are basically end-of-the-day calls anyways. This is a monthly chart. It becomes very easy for you to be able to manage your long-term fund. So I absolutely suggest that you consider using a tool like this. Now, while we have just a few seconds left here, let's go take a look at what's popping and what's dropping in the pre-market. 33% up is a ticker symbol TPI. Tianjin Pharmaceuticals. They closed at 71 cents. They're trading out right now. It looks like at about it's a penny stock. We're going to 94 cents. Let's see. You've got it's not Auto Nation. AMAP. They are up. No, Rhodes, R-E-E-D. They're up about 10%. Well, we sort of missed out on what's popping and what's dropping. But when we get back, we're going to go see how these markets are going to open. You can always give us a call, folks, 877-927-6648.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. Speaking of races, there's going to be a pretty big race this weekend. But in our races here, you got the Dow up about 13 points. The S&P's up 1.5. You've got the composite up 8. Russell 2000 not out of the gate yet. Somebody needs to maybe throw the carrot out there because the Russell 2000 only up 0.6 ticks. You got Microsoft up 25 ticks. You've got Intel up 9. Google up 16 cents. Cisco trading down 2 pennies. Apple out of the gate strong, up $2.73. Now let's go take a look at what is popping out there in the markets to the upside. You got Amazon leading the charge up 2.5%. They're up $5.50. Dick's Sporting Goods, they came out with earnings this morning. DKS is the ticker symbol. You know, I still have not been inside a Dick's Sporting Goods, so they're not making revenues based on me. But let's take a look at their revenue, see if I can find their revenue forecast here. Net sales up 15%, $1.3 billion versus $1.1. Let's see here what else. So they're being obviously their income must be up, their outlook must be good. That's Dick's Sporting Goods. They're up 7% right now. If we take a look at CRM Salesforce, we know that's a dead cat bounce, folks. So it's always interesting to take a look at some of these stocks that are out here that we know are dead cat bounces, and Salesforce Innovation, CRM, is one of those. You do have Groupon up 21% this morning, trade up $2.50. We'll take a look at Groupon. Agilent Technologies, A is a ticker symbol there. How'd they get that? They're up 5.5%, up $2 in change. You've got, as I said, Apple. You've got Enso, PLC, ESV. They are up about 2.8%. Amlin Pharmaceuticals, AMLN. They are up about 5% at the open. To the downside, grooving to the downside, you got ACAT, which is Arctic Cat Inc. They are trading down 14%. We'll go take a look at that for sure. They're down $6. You got Avon Products, Ding Dong. I think this is the second time. I can't remember if Avon Products was on the upside yesterday or on the downside. Today, though, I can tell you the Ding Dong is on the downside. They're trading down 11%, down $2.37. You've got the Valspar, VAL. They're trading off 3.5%. You've got Advanced Auto Parts, AAP, trading off about 2%. Home Depot. Now that's not a good sign because that has been a bellwether stock. They're trading down about 2.8%. Now, as long as the volume's not coming out of Home Depot, that's actually a good thing, and one of the stocks you absolutely want to have on your watch list. You got LinkedIn. They're trading off this morning, only down about 0.5%. You've got, Summer Infant, SUMR. They're trading down 28%. They're getting whacked. They are trading down $1.31, but their stock's only trading at about $3.50. And you got Siemens, AGSI. They're down 8%. Now, if you're trying to play a bounce here, if you're thinking that the market is going to bounce, and it can, the bounce, folks, is really going to come probably by focusing in on the euro-US dollar currency chart. And right now, that's what I've got up on my screen. And right now what you've got is the euro is trading inside the swing point, going all the way back here to the January 13th, 2012 time frame. The high on that swing point, 1.28771. The low on that swing point is 1.26229. Now, while it's trading inside that swing point, any type of bounce that you see out here, in my opinion, is nothing more than a head fake. A real bounce would be when the euro rejects this area here. Now, you've got a number of things going on inside the area. If you take a look at us on TigerTV, and folks, you can always catch the archive of this show on Channel 9. And if you take a look at the two red lines going across the bottom, maybe I can just lift the chart up. There we go. These two red lines coming across the bottom. You see, the last time that the euro moved down off of its highs, it moved down into some lows back in January 2012. Now, the areas that it were coming into were two planetary indexes 2 days in a row, August 25th and 26th, or 24th and 25th. I think it was the 24th and 25th. And so I've got the low and the high of that 2-day period because the market in August 2010 absolutely took off. When you have back-to-back planetary index dates, that is where you've got a lot of action. And so the markets came down and tested that in January. Right now, the euro is headed back into that area. You get a close below that. And let me tell you, folks, that is sending out signals much more important than the Paul Revere ride that I was doing earlier on the New York Stock Exchange. And so, it wants to get down and test that area. Now, the top is 1.27256. And the bottom is 1.25861. So you're going to want to be paying attention there. You're also seeing AB equals CD patterns inside the daily chart. If we just simply go to the high on February 29th all the way down to the low on March the 15th. And when I say swing point, folks, I'm just talking about a major intersection. Major intersection on the chart is where you're taking a look at it. Absolute reversal in trend, and you can see if you're looking at this on the chart, when I picked out the area here, I could have picked out either February 29th, possibly February 24th might have been the most accurate, but you can see we're all up in that high area. Market turns down, moves down into the lows here, into the March 15th time frame. Goes ahead and reverses back up, does a normal retracement. Looks like probably a 0.786 retracement, and now is doing a 1 to 1.272 A to B equals CD. That actual price projection, 1.277233. What it actually got down to was 1.27698. That is pretty darn good in my book. But I do believe you're still trading inside the swing point, and as long as you're trading inside the swing point, folks, you're not going to get any information released to you until you either bust back through it to the upside, or at least go back and test the bottom and then close back inside that area. So that's where I really think that we're going to see some kind of bounce. Otherwise, all of these other little bounces that we're having, until I see the euro, until I see the queen reject her lower area, the king is going to continue moving higher. When I say the king, folks, we are talking king dollar. King dollar doing exactly what it should do. And it wouldn't matter, folks, what chart we were looking at. When you do a 100% move of a move, you pause. That is exactly what king dollar is doing, that 100% move of a move. And it's coming into, this bearish engulfing. He had a bearish engulfing candle on March the 15th. What I mean by a bearish engulfing candle, folks, is as the market was moving higher, the body of March the 15th totally engulfed the prior session. You can engulf more than one session, but you have to at least engulf the prior session. And it engulfed the entire body. So this red candle here engulfs the entire green candle. You get confirmation with the price move down. The market moves down, doesn't I don't think it completed the full A to B equals CD pattern. It ran into this little trend line here, and that trend line stopped it dead in its tracks. Now, you had king dollar here do a move of a move, meaning that if we go back and take a look at April 6th, when it had a high of $80.38, it moves down into April the 12th, moves back up into April the 16th, doing 100% move. It did that 100% move as well as it moved down into the trend line, came back and came into that area on May the 9th. Came in on May the 9th, pulled back just a little bit, and boom, you took off to the next swing point. You were inside the swing point here from March the 15th. The high there, $81.16, actually got up to a high of $81.14. Are you going to give it 2 pennies, folks? I know I am. So it absolutely did the move. It's backing off just a little bit. But if we go take a look at the intraday charts, if I just change this here to a 30-day chart, and we change that to a 30-day chart, oh, look at that. You think that a King Dollar doesn't have a little juice in it, a little action? As you came into the 9/20 time frame, folks, you had 6,845 contracts. Look at that volume bar sticking out here, pushing that swing point, pushing that move, folks. And what really gave you the clue was right here at 4:20 a.m. Again, this is on the 30-minute chart. You had a bullish engulfing candle. Market was moving down. King Dollar was pulling back. What does it do? It says, nope, not going to go back anymore. It gives you confirmation. You've got a bullish engulfing candle. This entire session here on the 30-minute chart engulfed the 350 time frame. It engulfed the 320 time frame. Did it engulf that one? It did. So it engulfed 250. So it engulfed 3 candles, and then you had a price move higher. That said the King wanted to go higher. That says the euro wants to go lower. That's really what it's all about. And so when you take a look at that, trying to get on, the bounces are going to be very shallow. But I do believe that as we're going to just see how powerful this planetary index, August 24th of 2010, August 25th of 2010 is. That's really, you want to either see a total rejection of the swing point from January 13th in the euro, or you want to see it reject the area. Well, you got to see at the bottom of that or the top of that tested, and a rejection of price. If we take a look at market's relatively flat right now. Let's go over and take a spin around the spiders. And, as I mentioned earlier, that, the technology sector, 23% of the S&P 500. So let's go take a look at the technology sector. Let's get rid of J.P. Morgan. I don't need that out there. XLK is the technology sector. And, folks, if you just simply go to the website, if you just type into your search engine SPDR, you will get to the Spiders Select area, and you can find out, you can dive down under the covers and see exactly what is inside the XLK. You will see certainly Apple being the leader there, but you want to understand the top 10 stocks, or maybe the top stocks that make up 50% of the index, to understand where things are trading. Well, if we take a look at the XLK, which had been acting very strong as it was coming into the March 6th time frame. And what I mean by that, folks, if you go back to March 6th, we know that's a key area for us, one of the key areas, and you go back to March 6th, on the XLK, you'll see it had 14 million shares. Well, as you came into it on the 8th of May, you came into it 10 million shares. 10 million going against 14 million. Not enough to bust it down. In fact, you closed up higher. Not only did you close up higher, you closed up above the April 23rd swing point, which had 15 million shares. You go back down and you test it the next day with another 10 million shares. Not enough to bust it down. You go back and test it on May 10th. 8.6 million shares. Losing energy, not enough to bust it down. You go back and take a look at May 11th. 7 million shares. That was Friday. Not enough to bust it down. Yesterday, though, 14 million shares. And it, is inside that swing point. Now, the low of the XLK actually is 28.39. This, where it got to yesterday, was 28.40. So it got to 28.40, spent the night revving up its engines. There was the risk that this thing was going to gap over that swing point, because it stopped 1 penny before it. You are still trading inside it. That's this red line here going across. Right now you're trading out at 28.45. I would say today you're absolutely going to get the test of the XLK of that March 6th area. We've only been trading for about 16 minutes, and if we take a look at the volume, we've done 536,000 shares. So 1, 2, okay, you got you're in that 14 million range, really 12 to 14 million range today. And if you are a bear, you want to see the XLK crushed with volume. You want to see it close below 28.39. If you are a bull, you want to be able to see the XLK get below 28.39. Do it on probably like that 10 million share, 7 million share area. And this market is going to need some more juice to go lower. The XLK is going to be one of those places where you're going to want to pay attention to. Why? It represents 23% of the S&P. If we go take a look at the next sector out there, that would be the XLF, folks. And if we take a look at the XLF, if I can find that on my, here we go. Now, it's on a 10-minute chart. We're going to go ahead and we're going to blow that up into a daily chart out here. Give me a second to do that. So now we're going to take a look at the daily chart, the XLF representing 15% of the S&P 500. Now, what you can see out here is if we go take a look at March 6th, the swing point high out here. Let me actually kind of get rid of some of this stuff out here. It might be easier for you home gamers to follow along. So now we're taking a look at March 6th. It's going to be easier for me to talk about. So now we're looking at March 6th. We're taking a look at the high out there in the XLF is going to be 1462. You're trading at 1452 right now. Let's take a look at the bottom of that swing point. The bottom of that swing point is 1440. So you're going to want to be paying attention to 1440. Why? Because that area has not been tested. You closed yesterday inside that swing point. Let's go take a look at the volume. Always important to draw the volume bar, just as important as it is the high and low of that swing point. So we take a look at the volume. The volume there at March the 6th, 93 million shares. When you came into it, you were starting to come into it on May the 11th, on Friday, with 99 million shares. So you're coming in with 99 million. The swing point has 93 million. If you start coming into a swing point and volume is picking up, folks, what it's telling you is you're going to get inside that swing point. That is exactly what happened on Monday, yesterday. 91 million as it got inside. You're going to want to see a test of the low, really, to be able to get any kind of information, bullish or bearish. The bullish case is you get down below a price point of 1440, less than 93 million shares, close back inside 1440, and then you've got a failure on price and volume of what I would consider to be a pretty major area, pretty major swing point, because you're also looking at that gap up from February 12th, the high there, 1441. Got the Dow off 4 points. S&P's totally flat. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today, because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Got the Dow up 27 points, S&P up 3, Composite up 9. You know, everything's up maybe about 0.3%. The Russell struggling to get out of the gate, up only 0.1% right now. Let's go take a look at OPNT is the ticker symbol. It's OpNet Technologies. Their 52-week high is 47.97, 52-week low 22.08. Right now they're trading out at 27.42. They've had a nice move today. That is based on, looks like an earnings release here. Let me see. Let me get on here. OpNet Technologies, their guidance. Let's see. They had earnings, just their guidance. Let's see here. Net income $4 million versus 3.8. That's not really a big deal. Revenues 44.6 versus 41.1. And if you take a look at this stock here, folks, don't go chasing after this one. This thing here, after making highs going back to November 2011, November 8th, 2011, was making a high with about 425,000, 340,000. And then as it came off of those highs, 2.2 million shares to the downside. That was the first leg down. If we take a look at the A, B, C, D patterns and why you want to understand A to B equals C, D, folks, is because they absolutely are leading indicators. They are telling you where the stock is going. You know, even if you had gotten out on that day when it came down with 2.2 million shares, you would have got out at $35.58. That would have saved you a lot of pain, a lot of aggravation, because your one-to-one said you were going to go down to the 24.94 area. Does a little bit of retracement, tries to get up, gets up, and over just for a day or two of the gap down. The high there was on the November 10th, 2011. That high was $39 even. Tried to get back up there, and, it didn't. And what does it do? It gaps down again. It gaps down on February the 8th. And when it gaps down, another $2 million out of that balloon, folks. And then there's a third gap down here. No, this does not look like a good three-gap play to me, because the first gap is the largest gap, and the third gap for an exhaustion gap needs to be the larger of the three. And you take a look at when it gaps down again, it gaps down with 1.7 million all the way down to a price point of 22.71. So if you are a trader investor and you're not using stops and you're inside a stock, doesn't matter what stock it is, and you get a large gap down like that, you're going to be setting up your A to a B point. You might, go a little bit lower, just as OpNet did, but you want to pay attention to that. If you take a look at the volume today in this stock, not bad volume, 286,000 shares, but that is going to be going against this 1.7 million. And to me, there's not anything that I see here, certainly on the daily chart, that would entice me to go after this. And now you put it on a weekly chart, and you've got volume absolutely off of the high back on November 11th. Maybe the stock can get all the way back up to the low of 34.14, but it is not worth chasing or playing, in my opinion. Let's go take a look at a couple of other equities. Well, we can't look at a couple other ones because we only have about 15 seconds to go. Let's take a quick look here at Summer, SUMR. They are down the biggest percentage-wise in the market, gap down to $3.57. Does it have any friends down there? It has a few friends, but this thing is looks like this also has further to go to the downside. Folks, thanks so much for being here today. Stay tuned. I would say Tom and I are going to be up doing the Money Master Show, but Tom is still up in New York at the Hard Asset Show. If you are in New York, folks, pay him a visit for me. Give him a big bear hug, if you will. I'll be back for the next hour. Then we go to Kate Stalter out in Santa Fe, up to Chicago for Victor Jones, and then back out to California for Ken Shreve. Thanks for being here, folks. I'll see you in a few if you're sticking around. If not, have a great Tuesday, folks.